All right, I just made $4,350 on Friday, and I want to show you in this video three things. Number one, the strategy that I used. Number two, the exact trade that I used. And then number three, how I plan to do this on Monday. So if you stick around for those three things, you're going to have a trading plan that you can use. So let's go ahead and get started. So the first thing is I'm looking at the opening candle on the QQQ. So this strategy works a total of 81.95% when the market opens on a green day, the first hourly candle. It works 73% of the times on a red day. So let's take a look. So how does this work? Well, we identify the first hourly candle. If it's green, we're looking for long. If the candle is red, we're looking for short. Now, I talked about this in a previous video, and people had a lot of questions. So let's go ahead and take a look at Friday. Look at this, 9:30 candle, it was red. Okay, so it was red. Now, what happened? The market then took off, went up, and then collapsed towards the end of the day. So, did it end up being a red day? Let's look at daily. Yes, it did. It ended up being a red day. You see that nice pen bar fake out? So how did I trade it? Well, we see the hourly candle. I was expecting a short, and so the price went up, and I took a short not right away. I waited for the price action because we were going up, and I'm like, okay, I can wait for it to start getting a little bit tired. So I didn't short it as soon as the market opened, as soon as the candle closed, because we got that first 1 hour candle right here. I waited because I saw it was going up. So how did I trade it? Well, let me first show you the trade here. You can see right here it says QQQ call credit spread, $4,650. And then at the end, I closed it for just $300. So I got a $4,650 credit, and I had to close it for $300. So that means my profit was $4,350. So let's take a look at how the actual option order worked. So the way that I did this was, since I was shorting, I went to the QQQ options, and I was looking for something that they call a bear call spread. So when the candle was moving up here, we'll go to a 15-minute chart. When it was moving up, I looked at this level, and I saw the 530 level. And I was like, okay, when we get up here, 530, 532, I don't think price is going to go over there. So I sold a bear call. So look, right here, and the price is a little different, so we can't do the same thing. But I went to, if you go to sell a call, you look at the chance of profit. So I did roughly 70%. So in this case, it's 529, and it was actually 530 or 531. But I did actually, if we look at the actual trade, it was 530, 531. So in this case, we're going to just do for Monday. We're going to do 203, and then we're going to buy the 160. Now, how did I get $4,000? What's really amazing about this is that it only takes a very small amount of collateral here. This has only cost you $100, and you get a total of 43 cents. So that means I risk a $100, and I get 43 for risking 100. That's a 40% ROI. That's pretty good. Well, you still, to get actual 400, you got to bump it. So we go 100, and we do 0.43 credit. There we go, 4,290. This costs me, how much does it cost me of buying power? Well, to do 100 contracts, the amount of buying power that I need for this is $10,000. So I'm spending $10,000 to make $4,291. Not bad. That's a 42% possible return on investment. Now, of course, if you lose, you could lose the entire 10,000, which is pretty heavy. But we know that this win rate is 80 some percent or 73% on red day. So it was a red day. So one other thing I want to mention here is that when I first took this trade, the price had dropped a nice amount right here. I took it, I remember this specifically. I took it here and it dropped and I was up like $1,200. And I was like, oh, wow, I should have taken that profit. So next time on Monday, I'm going to take the profit earlier and not have to sweat all day and wait for it to collapse, because I felt like I was in a lot of trouble and it was not good execution. So next time on Monday, I'm going to wait. I'm going to wait for it to happen, and then I'm going to let the price action move out, and I'm going to take profit a little bit earlier. If I take profit at 25%, well, then I have a much higher win rate, right? So if this strategy, like we showed here, wins 82% of the time or 73% of the time, and then on top of it, I'm taking profit at 25%, that brings my win rate way up to probably 90 some percent. So if we take this strategy and then we add timing to it and we take our profits early, it has an extremely high win rate. So on Monday, I'm going to go ahead and I'm going to be trading it a little bit differently. I'm probably going to be doing one on the QQQ, and I might be doing one on the SPX as well, just to kind of spread it out a little bit, or SPY, because you can do the same strategy on the SPY as well. Just to spread it out and to take different trades, I'm probably going to do that. So I'll keep you updated on how the strategy works. Again, hit me up with any comments or questions. A lot of people were asking about it, about what option I was using, and I showed it today. It was a 0 DTE expiration, but I made $4,300. Let's see if I can do that again on Monday. That would be really exciting, don't you think? All right, hit me up in the comments if you have any questions. I answer every question that I get, and if you're interested in getting a free indicator that I built for this, just check the links in the description, or if you're interested in learning about my options course, check the link in the description. All right, thanks a lot.